Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, July 28th, 2010. Well, the Beige Book has just come out at 2 p.m. Eastern, and the markets have started to sell off. We are now hitting the lows of the day, and it's a very, very key level that we just broke, which could tell us the market is headed down further for the rest of the day. Now, what levels are we talking about? Clearly, you can see that this white trend line down here has really been the base of this market going all the way back to Monday. Monday afternoon low right here. After that, we started to make higher lows and lower highs. We created a little bit of a triangular pattern, and we did break that pattern this morning on the way down. At that point, we came down to this key level at 111 to 110.95 on the SPY, and now we've bounced off that, and you have to see that this level is now the next break point, and we have closed below it. But I want to just remind everyone, it's no confirmation yet. We have to wait to see where this candle closes. And again, I'll continue to analyze it through this intraday video and then furthermore in the intraday stock chat for premium members at InTheMoneyStocks.com. So you can always come and join there, folks. But again, please note, we have a possible breakdown through this white trend line. We had a secondary first breakdown this morning through this key line. Again, notice the first bounce above, then second close below, closed on, closed below, and then further down we went right into the next support level at the 111 to 110.95 level, then a retrace bounce back to this key level. Notice this green trend line sloping from the high from yesterday through the secondary pivot high into the close, and then through the high pivot right here. Each time we hit that, we seem to fall back down, and again, you can see an in spirit of hit right here, and now we are trading below this white trend line. But I want to just remind everyone again, and I go over this time and time again because it's that important, until you confirm to the downside, you cannot assume that this level has been broken, the 111 to 110.95 level SPY. And at the same time, you can't assume until we confirm that we're most likely going to go down and test this 110.50 to 55 level, 200 moving average, and lower white trend line down here. All right, so we'll watch that again in the afternoon session. Market again, I have had a slight negative bias for today. That is playing out perfectly as of now. In tune with that, again, I picked up a little bit on the short side over the last couple days. That is paying dividends for us and those premium members in the Research Center. Research Center, $49.99 per month, covers everything listed under there, including guidance, education, analysis, swing trades, videos, you name it, it is all included for that $49.99 per month. Notice again the market is starting to inch back up a little bit. Without confirmation, we could easily get back above this white trend line and close and then actually go back higher all the way up to this lower green trend line until we confirm. So we're going to take a look at a couple other things. One other thing I wanted to mention today, there are some stocks in play. I want to talk a little bit about those. But first, let's talk about the commodities. What's going on with gold? What's going on with oil? Gold is trading flat on the day. Yesterday was a huge drop. One of the great calls in the Research Center for those Research Center subscribers that are watching this free video out there on our blog. You can see here again, folks, check this out. Beautiful drop in spirit of bear flag. Called that out to the premium members as a bear flag. Expect a fall. What happens? It falls. Off of the fall, what happens? Another in spirit of bear flag. Keeping with my negative bias all the way from up here. And as we came down, had more of a negative bias for a drop, and that's where we came down to, all right? And again, your target here ultimately is the 200 moving average on the GLD, and that's at approximately 112 to 112 and a quarter on that GLD chart. USO, what's going on there? Basically a flattish day. USO is just down 15 cents. Please note how you had a drop yesterday and a further drop this morning on inventory reports as oil inventories came out. But notice how it pierced two major support areas and then bounced back above. You should not be surprised to see the bounce off of these levels just based on the fact that it's the 20 moving average and the 50 moving average together. That's a major level when they combine themselves. And sure enough, the market has rallied back on oil there. A couple other things. What's going on with the dollar? Dollar is flat to slightly lower. Was lower today, but has rebounded a little bit, still down about 2 cents on the UUP. You can see what a drop we've had on the dollar. Notice how the markets have rallied pretty much, and if you compare the SPY daily chart, take a look at the SPY daily chart. Here's your pivot low on the markets at 101 to 102. Now, where was the low on the dollar? What date was this? First of all, let's get the date on the SPY. The date on this was basically the beginning of June, I believe. Right at the beginning of June. Check that. Yep, right around there. Actually, right at the beginning of July. So we basically bottomed out right at the beginning of July. And now if you go to the dollar chart, where did the markets top out? Right up here. Same area. All right, so again, the dollar tops out and reverses to the downside. What do we see about the markets? The markets start reversing to the upside, and off they go to the upside. Notice the different range or the different direction that you're seeing the markets go. They go the opposite way of the dollar, and the euro goes the same way as the markets. If you take a look at the euro has rallied significantly along with the markets. So if the markets are going up, chances are the dollar's going down and the euro's going up. All right, let's go over a couple key stocks today, and then we'll go back to the SPY and focus on what it's doing here into the close of this current candle. Chevron is having a flattish day today, really not much movement. That stock is getting a little on the overbought side. What I'm looking for ultimately on the daily chart is really this kiss right here, which it did do. So notice that kiss right there, and that's actually a good shorting opportunity right here as of the high. Now it's pulled back since that level, but notice the 200 moving average. Great opportunity to short, and again, we talked about that this morning in the intraday stock chat as a possible shorting opportunity and in the nightly videos that are included in the research center. ExxonMobil right here. Take a look at this, guys. See this little pivot area? Draw your line across. Check that out. See from this little gap right to this pivot high right here, from this little pivot high and right through. Look at that today. Right into that level, that's resistance on Exxon. So you're coming into a lot of key resistance levels on some major market movers, which again, we should not be surprised to see the market a little bit to the downside at this point. All right, really should not be surprised at all. Goldman Sachs. Goldman Sachs is bucking the trend here, up about 47 cents. Please note the triangular consolidation pattern right here off of the up move. Ultimately, right now, this would be considered a little bit of an in-spirit of bull flag pattern, but I want to just let you know, if you close below this lower level, this trend line breaks, you could easily fall back to this point of interest. All right, very, very important to recognize that, folks. And again, there's always a case in point. You might have the best setup on the charts. It may be a 90 to 95% winning chance or probability of a win, but there's always that 5% chance you have to be prepared with. Look at every trade you make from all angles. Never assume it's going to be a winning trade. Always have an exit strategy as well. All right, yes, I bet 80, 90%. So 8 of 9 out of every 10 trades I'm going to be winning on. We're going to be making money in the research center on or in the intraday stock chat on. But there's always going to be that 1 or 2, and that's the key. Anyone who tells you that they bet 100% all the time is fooling you. Don't believe them. Run the other way. All right, now just take a look at IBM here. IBM, folks, a nice little intraday chat call here and on the blog as well. Take a look. This pivot low right here. Draw the trend line across. And look at this area right over here. You have a nice little support area. You're getting a little bit of a bounce off of that 200, just above that 200, and the pivot double bottom. That's a good little possibility. And look at the bounce on IBM coming in here. You got to be recognizing that and be ready to do these plays. All right, let's go back to the SPY and summarize here again. Look at the market. It has not confirmed. Now, remember, folks, confirmation is an in-the-money stocks proprietary technique, along with many, many others that we continue to teach our members. And as you can see, there's no confirmation of a breakdown as of yet. You have to assume at this point that this is going to recapture unless it confirms, in which case then it's headed right down here. Have a wonderful rest of the day. Again, join the intraday stock chat. Join the chat room. We'll see you there and the research center as well. Talk to you soon. Take care.